Welcome, everybody. Glad you're here for this special FOMC Cigar Lounge. And before we get started, I'm going to go ahead and share my screen. And as always, you should know that options involve risks and are not suitable for all investors, and that this is backward-looking, not forward-looking. As always, please consult with your financial advisor before placing any of these things. These are for educational purposes, all that stuff. So let's have some fun for educational purposes' sake. Can everybody see my screen? If so, you can just say yes, or you can just type in the chat room there. Here is a trade, a portfolio of trades I've put together. And I want to just start with some caveats to FOMC. Has anyone ever traded FOMC days before? Not on purpose and not by accident? Although I'd love to hear if you accidentally traded FOMC days and you didn't mean to. FOMC is a crazy day. And what you're going to see, if you've never traded it before, at 2 o'clock, the market's going to go nuts for about 10 seconds, right? And vol's going to be all over the place. And there's going to be a quick repricing of whatever the data says. And you're going to have that, and you're going to have this initial thing that's like, are we done? Is that it? And then at 2:30, Jay Powell is going to talk, and he is going to say something that's going to most likely move the market again. Again, watch it be a day where it is unchanged for the day. That'll be fantastic. But in general, that's how FOMC days go. And so it's a day where you have a ton of volatility in the market, a lot of movement, and you have a lot of different things happening, in a very short period of time. Normally with FOMC, and this is just a caveat, if you're looking to get bearish, it's a very, very hard day to do that. And we'll talk about that here in a second, why. But in general, the market, and especially today, the market's primed. It's pretty darn primed from the vol standpoint. So I'm not saying don't take bearish trades, but I will just give the caveat to say I do think that from a probability standpoint, we might be primed for a pretty vicious rally as long as he doesn't say something like we're going 3% or something that just completely shocks the market. Again, watch it drop 200 points. But that's my general kind of bet on the market today. If I was betting on it, I would say, there's a good chance that we rally pretty hard this afternoon. That's my thoughts. They're worth nothing. But with all that out of the way, let's look at some trades. So this is a portfolio of trades, and all of these are based on one contract sizing. And the way I set this up is these are FOMC days for 2021 and this year. You could go back farther in time. By any means, we have a whitelisting feature, so you can just trade certain days. This is largely out of laziness on my part that I didn't go farther back, but it is what it is. So you can at least get some ideas. So let's go through each idea. And I think most of these are neutral to bullish, I believe, but we'll look through them. So I'm just going to go through them. And before I forget, I'm going to go ahead and right now and share this portfolio with you. So, and please interrupt at any time if you have any questions or anything like that, but otherwise we'll just go through it. So the first trade is a trade that I actually have done on FOMC days a lot. And it's, theoretically the riskiest, although it's actually not theoretically the riskiest, but it is a ratio. And, I usually, just being honest, I usually do this in ES options more than SPX. And what it is at 2:35 p.m. And again, FOMC days are time dependent. They're not like normal days. There's very specific things happening on these afternoons. So what's happening at 2:35? Like what would be happening right at that moment if you've ever traded it? Any takers? So at that point, Powell's going to he would have started his press conference, and he's going to be talking, okay? And theoretically, going back to 2021, if you put these trades on at 235 and you sold a 50 delta call 2 days out and you bought 2 calls 50 points out of the money to the upside, so it's a 1-2 ratio, and your profit target was 20%, you are going to exit this today. You're going to get out by the end of the day at 3:55 p.m. You're not going to let it sit or do anything like that. And then trying to make it realistic, some closing fees, opening fees, some slippage, require 2 price targets, stuff like that. What you're going to find is that it works most of the time. Again, theoretically, backward looking, not forward looking. And let's get into how this works. You'll notice that some of these are a credit and some of these are a debit. And the way that's working is largely based on volatility, where it's priced. To be honest, this is more discretionary. I would actually try to get this even. I actually, in some ways, would like this one was a good one. You collecting a small credit is what I prefer to do. But, this is mechanical looking back, so we'll just let it ride. But you're ratioing this out, and so you're saying I'm selling at the money and I'm buying 2 of 50, for every 1 I'm selling, I'm buying 2 50 points out. And what you'll notice is that because this is such a short-term trade, you're getting out very, very quickly. Either way, you're going to get out very, very quickly. But on some of these winners, you're going to be getting out in, 14 minutes. You're going to be getting out in 3 minutes, 4 minutes. Again, is this the type of trading you should do every day? I certainly don't recommend that. And I'm not saying do this. But it is an interesting trade as you look back at all of these Wednesday FOMC days. That it's a very quick trade. And how it works is with a ratio, the reason you don't hold on to it is because there's a pretty big tent of doom in the right past that 50 delta. But what happens is because you're 2 days away, any quick price movement to the upside, it's actually a positive delta trade when you first put it on. So that's the first one. And that, I think, in some ways is the most complicated. Any questions about that one?